How's it going, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, my name is Bobby, and as I do every single week, be taking information from the overall market, industry groups, and much, much more, packaging it all together to get you guys ready to trade for next week. So, without further ado, it's time for the Rapid Review. All right, if you're joining us for the first time, down in the description, we have the agenda as well as timestamps if you want to jump around. But I do highly suggest waiting and staying in here till the end, where I give the stance on the market, my 0 through 10 ratings, so you can see where I think this market is going. Well, let's get started with the current state of the market. Market direction, we are in a confirmed uptrend. We've been that way for 4 weeks, for full weeks. As you can see, we are 20 days in an uptrend. So really, really positive sign. But the even more positive sign happened on the NASDAQ this week, and that is a power trend. We got the indicator putting us in a power trend on Tuesday the 31st, which is a very, very positive sign. If you don't know what that is, you go on ibd.com. They give a pretty extensive breakdown, but basically 4 things have to happen on one day in order for us to get that indicator, which shows that we're in a strong uptrend. We didn't get it on the S&P. We were very, very close on Friday. Good possibility we do get it next week, but I'll keep you guys posted on that. And if we do get it, I'll make sure that I tweet it out so everybody knows. Distribution days. So we ended off last week with 3 distribution days. I did leave off 1 on accident. I said we ended off in 2 last week. We did end off in 3. To be completely honest, the one that did occur, I still don't know where IBD is getting that from. It's a very, very light distribution day. So needless to say, we ended off with 3. We finished this week with 1. And the 2 distribution days that we lost were the June 17th and the January 17th and the January 18th distribution days due to price movement. All right, so let's look at the distribution day tracker. There's that 1 distribution that I did leave off. Again, still not sure what criteria was met to give us that distribution day, but it was very, very light, so not too concerning. And there you have it. We got a ways to go before it drops off, but again, not too concerning. Looking at the moving averages though. So we have the everything green, which is same as we were last week, which has been a positive sign. So 2 weeks in a row, everything green. The S&P did finally have all the moving averages cross to the way where the 10 sits above the 20, 20 above the 50, 21 above 50, and 50 above the 200, which is a very, very positive sign. NASDAQ is 8.9% above its 50-day simple moving average. Not too concerning. Can get concerning as we start to get into the double-digit range, and something to keep an eye on how extended we are. Just means that we could have a pullback, and that would be very normal action. But other than that, not really much else to say about the moving averages. For the week, S&P was up 1.62%, NASDAQ up 3.31%, and the Dow down 0.15%. For 2023, the S&P is up 7.73%, sitting in second place currently. Excuse me. NASDAQ winning out the year so far, up 14.72%, and the Dow up 2.35% for the year. But now it is time to take a look at the indexes and really, really see what went on this week. So let's jump over to Thinkorswim. And we'll start off by taking a look at the daily. I'll zoom in so you get a better look at this week. So you can see on Monday, we kind of pulled back and broke back below the 200-day simple moving average. Definitely was a concern. Kind of one of those days where you finished out and you were going, is this going to be what we've seen consistently, where we're just finding these resistance points and then just continue to go down lower from there? But we came in on Tuesday, and that wasn't the case. We ended up breaking back above the 200. The volume was higher from the prior day, which was a good sign. And that started what was going to be a big week. Wednesday, once we had that meeting, Fed meeting on Wednesday, the market just took off. It followed through with that on Thursday with a huge, huge gap up. You could see that the volume really just continued to pile in throughout the rest of the week. And then we ended off the week Friday, pulling back, closing in the low of the day, but volume very, very light. So overall, very, very great positive action happening on the NASDAQ this week. Let's jump over now. Oh, that was the last thing I just want to mention too. We also had our 10-day get above the 200-day, which was a positive sign to see that first moving average to cross above the 200-day. Now we would just like to see the 21 and the 50 make its way, so it could sit just like the NASDAQ. Looking at the weekly, 5 up weeks in a row on the NASDAQ. Very, very positive. A lot of these weeks closing in the high. You can't see it here. Moving average, the volume looks great. We actually had more volume this week than last week, so volume continues to pour in. And last week and this week were both above average volume weeks, finishing in the high ends of the weeks. You can see we've clearly broken through this downtrend, but now the question is, can we continue to maintain where we're at in terms of a trend and continue to trend higher? So all really positive signs from a weekly standpoint. We'll see if we can continue that. So looking at key levels on the upside, big level to really watch is where we've kind of looked like we might have experienced some resistance. And that is going all the way back to the June 2nd, 2022 high, this 12,316.9. That's our next area of resistance. We could possibly be meeting it already with some resistance, but just keep an eye on seeing how we interact here. Ideally, we want to just kind of push through that price with no problems, but we could be rejected and go down lower, or we could just bounce around sideways in this range for a little bit, which wouldn't be the worst thing. Just something to keep an eye on. On the downside, for me, my line in the sand is the 200-day simple moving average right now. I think we could pull back and fluctuate kind of really in this range very easily and healthy if this is going to be a longer-term uptrend. But if we break below that 200-day simple moving average, to me, that's one of those things that is an indicator that this might not be working and this could be a little bit longer to wait before we have an uptrend. But yeah, that's really all I got on the NASDAQ. We'll jump over the S&P, to be honest. Pretty much the same action that we got on the NASDAQ. Nothing really else to write home about. Here, clear resistance on the June 2nd day. But yeah, I don't want to waste too much time. I think a lot of the takeaways that I'm going to have from here are pretty much the same that I had on the NASDAQ. So if you have any questions or any comments about major indexes, definitely comment down below. Would love to hear what everybody else has to say. So to the industry groups. All right, so on the industry groups, we're going to be looking at the top 10, bottom 10 weekly performers, biggest jumps and falls in the rankings, and the top 20 industry groups. We brought that back. I know that was a request. We did just top 10 last week. Everybody wants to see a top 20. I can agree. It is definitely important, especially when we're seeing the rotation. Also had some people saying that they really want me to talk about what's going on in terms of rotation within the industry group. So we'll definitely touch upon that. All right, so top 10 weekly performers, have those on the screen. My biggest thing that sticks out to me here is you're really starting to see those home builder type companies and things related to home building showing a lot of strength. You take just a quick look at any home builders and their stocks, they're all showing a lot of relative strength and they're performing fairly well. And then you also see companies like industry groups like retail home furnishing, building AC and heating products, and some of these other companies and industries doing well that are related to that area. So that's a big standout that I'm getting from here. The other thing that we have to talk about is semiconductors. They've been doing very well. I'm sure if you've bought stocks, there's a good chance you've bought some stocks within the semiconductor and chip space. We're not going to see any of that data here, but it is clearly, if you're doing your work every single week, you're going to notice that. So something to pay attention to. And hopefully we'll start seeing that hitting the data in terms of the rankings and things like that. Bottom 10 weekly performers. You want to talk rotation? This is a slide to show it. The oil and gas, getting hit the most this week. Good sign if you're looking to see, that rotation into growth in tech versus what we've seen was working in the past, which is industry groups like the oil industry. Biggest weekly rank jumps. Nothing that really I think is worth commenting on right here. And falls. Retail, you see a lot of retail. Energy alternative, taking a pretty big hit. I think a lot of people who are in solar and a lot of people had some promising plays originally in solar that probably got stopped out. You're seeing that kind of trend continue and shows why it's important to have stop losses. All right. So, like we said, back to the top 20, bringing that back. Big takeaways here. Like we said before, building, residential, and commercial, seeing that jump 26 to 12. So, again, just data showing that strength going into the building space. Other than that, see oil and gas continue to drop 14 to 17. And that's really all I have to kind of add in terms of this slide. So we'll go into the top 10 industry groups, be showing all the data there, as well as the Campos composite stocks, which are just stocks that meet this criteria, and I'll highlight anything that's actionable. Before we do get into this, I'm going to go through it very, very quickly. There's a couple industry groups that are in there that, personally, they're just small groups, very, very few stocks. And there's also a couple groups that I just think the rankings aren't really, it's going to take some time to maybe work out because they just don't look that great and they're getting hit. So I'm going to go through it real quick just to show everybody what's going on and what shifting we're seeing and to be consistent, but just wanted to make that point. So let's jump over to number 10 and machinery, construction, and mining on the screen. You can see it was 12 last week, down for the week. This one stock in here that I think is on a lot of people's watch list from just what they're doing, and that's Caterpillar. Company is definitely innovative in that industry. They were a company that was talked about a lot on a lot of IBD podcasts, and I know a lot of other people are talking about too, just because of some of the stuff that they're doing in terms of AI and technology and things like that. So, but yeah, other than that, not much else to say. Jump over quick to number 9, mining, metal, and ores. That went from 7 and dropped down to number 9. So we're seeing that stocks like this starting to fall down. This is a big group though, and it's interesting to see them starting to drop out maybe of the top 10. Looking at stocks, you see there are a couple of stocks in the base are actionable, but not a ton. All right, we got now number 7, commercial leasing. See that on the screen. United Rental, that's I think a stock that a lot of people probably had on their watch list. But this group, it's definitely performing well. This is one of those groups where what I said earlier about the top 10, I mean, this is showing it deserves to be in the top 10. 96 RS line's rocketing up. Above all the moving averages, continue to go higher. It was up 3.94% for this week. So this is definitely a top 10 industry group. And I'll show you guys the stocks. So there you go. Good chunk of stocks in there. Couple of them in bases or possibly actionable. So this is one I think it's worth maybe paying attention to. All right, next up, retail apparel, shoes, and accessories. This group, look, it's dropped from 4 to 7, but I think it's doing all right. I mean, just kind of trending upwards in a mild way. Definitely has a lot of overhead resistance, but definitely a group that I even been paying attention to just because there's a couple companies that have been popping up on my watch list over the past couple of years that seem to be doing something different in their space, whether it be a Revolve, Buckle, Boot Barn, things like that. So personally, I'm paying attention to this, but nothing I'm banging the table about. And only stock in there, Buckle. And it is in a base / actionable. All right, number 6. Leisure movie related. Look, this is the Netflix group. Those Netflix definitely had a decent week and starting to carry up. So I think that's where we saw this jumping up from 9 to 6. But yeah, another group that's trending higher. Not much else to say about that. And one stock in there, not actionable. Number 5. Metal product distribution. This is one of those groups I'm going to skip. It's a 3 stock group. Yeah, it did great. It was up 10.16%. But when you got only 3 stocks in the group, it doesn't take much to really rocket it higher. These are the groups that I really wish IBD would kind of start sorting out and maybe rearranging some stock groups, especially because we have so many tech companies now that do so well. It'd be better to see maybe those groups be a little more sectioned out and groups like this combined up. So that's my take on it. But yeah, stocks in that group, none. Next up on number 4, dropping down from 6, jumping up from 6. You have steel producers. yeah, this group's doing well. You can see it's good trend up, strong RS, strong week. This is a group that had probably been in the top 10 many, many times in the past year. And stocks in this group, you see there's a couple there. One of them actionable. Number 3, retail, home, office supply. One stock in this group. Not even going to mention that. Nothing really to waste our time with. Number 2, retail department stores. Smaller group, doing well. 99 RS trending up. Definitely a strong group. And you got Dillard's as the one stock in this group that meets the criteria. And number 1, oil, gas, field services. This was 2 last week, went to 1. Very interesting to see what happened here because I'm not sure if IBD made some sort of mistake on this, but something to take note of. This was 2 last week, jumped to 1. And retail department stores was 2 last week. So 1 last week, dropped down to 2. Yet retail department stores was up for the week. And oil and gas field services was down for the week. So might have been a little bit of a glitch there. You can see the RS is trending down. I think this follows the thought that we've had of the oil, gas, and field services probably dropping out of the top 10. And I think a lot of this has to do with their rankings are clearly based off their RS ratings of the industry groups. And this RS rating is based on a longer period of data. Still 99, which means it's probably still beating out retail department stores. But I think from looking at the data, you can see that retail department stores is doing well. Oil and gas field services is kind of looking like it's about to go in a down trend or at the very least flat, which is showing low RS. But other than that, that is all we got. Look, I think, actually, you know what? I did not show the stocks. There you guys have the stocks in the top group. All right, so before we jump into earnings, just want to say, I think this is, again, a little early to see any real clear leadership, but this is something we want to keep an eye on because eventually there is definitely going to be a clear leader that sticks out. We want to be ready for that so we know where to put our money. Jumping into earnings, up on the screen, a bunch of different companies reporting. Always be conscious of any companies that you may be owning that are reporting, or any companies that you're possibly thinking about owning that are going to be reporting. So have those on the screen. Feel free to screenshot that, take a look. So now it's time for the stance on the market. Like I said, this is my 0 through 10 rating on the market last week. So there you have, for those who are watching for the first time, there's the scale. So you have a better idea of why I'm picking the score. So last week, I was at a 6.8. And this week, 7.8. So there you guys can see that here. Big jump up for my number, up a whole entire point, putting me on the very high end of bullish. So let's talk about why my score is what it is. First, let's talk the good. Number 1, power trend. Huge thing. Going through a power trend is a very, very positive sign. Getting that indicator automatically makes me think this is a lot more positive than a lot of people think in terms of the market direction. The overall market, the indexes look amazing. We just looked at those charts, especially really the S&P and the NASDAQ looking great. Dow lagging, which is more of those oil and protective place type stocks, following suit what could be a big uptrend. There's some strong breakouts we're starting to see. If you've been purchasing stocks, I'm sure you've had a couple of plays that have been 5, 10, 20, even more percent up over the last week or two. So another good sign. The big names are starting to show some strong movements. Meta, Amazon, Google, Tesla, Nvidia, Apple. Good to see those stocks possibly making a turnaround. If this market's going to go as a big movement, you want to see those bigger names also showing some strength. And with that being said, we're possibly seeing that shift to tech and growth. Like we just said, we saw the oil and gas dropping off. Starting to see, if you're doing your weekly routines or even daily routines, starting to see some of these more growth and tech plays popping up and starting to perform well. So all positive signs there. Now for the things that are concerning to me. There's still a lot of overhead resistance on the indexes and on a lot of stocks. So that's definitely something to be a concern. And I think this is the other big thing that a lot of people are forgetting. A V-shaped recovery like we had in 2020 is not all that common. So it's something to be conscious of, that we're probably not going to just have this big long downtrend and then rocket back up in a V-shape. There's probably going to be some more ups and downs. There might be a flat moment. We might go up, but then pull back to not create a lower low, but have maybe a shorter term downtrend before we continue higher. So it's just talking probability here and something to pay attention to. Look, it's simply too early to tell. We just broke through the downtrend. Everything's looking positive though, so it's a good sign. There's no clear leadership yet. Definitely would like to see that. But yeah, other than that, I think everything's really positive. I did get a little overzealous, to be honest. At one point, I was fully 100% invested this week, and I realized I got a little overzealous and took some profits, which was a good thing. Reduced my exposure to about 75, 80% right now. But yeah, just, go check yourself, see where you're at. If you're somebody who maybe isn't purchasing anything, take a look. I mean, there's definitely been merchandise out there to buy. There's definitely been some winners out there. If you're somebody like me who got a little overzealous, maybe go check yourself a little bit and realize that it doesn't mean this market's just going to go ripping. We could get a pullback. With that being said, that is all we have for this week. If you made it this far, really appreciate it if you'd subscribe and turn on notifications. Like I said, do this every single week. Click that button right there. It'll take you right to the subscription. And like I said, turn on notifications. But top right-hand corner, you can check that out. That is this week's chart breakdown. This was viewer requested, and there's a little bonus one at the end as well. Or bottom, you can see that's just our playlist of basically chart breakdowns that I've done. So you can check that out too if you want to see some of last week's. Other than that, that's all I got. See you guys next week. Stay disciplined.